Hello everyone. The day after Thanksgiving Day, the market gave investors a heart attack because of a news about a global concern over a new coronavirus variant. A new coronavirus variant is detected in South Africa, and they found that there are high number of mutations and rapid spread amongst young people. The scarier part is, as there are too many mutations involved, it may render our vaccine useless. As a scientist background myself, this news indeed worrying me. Not because of it may shake the stock market again, but because it could infect younger generation easier, and I have a baby at home. Furthermore, if it causes the vaccine ineffective again, many people will be suffered. We have enough sad news and stories because of the COVID infection. Back to the story. If all our current vaccines are ineffective against this new strain, we could expect that many countries will start to close their borders again. When the cases become more serious, lockdown may happen. We could anticipate the speculation on the economic recovery would be reversed. This is the reason why value stocks and travel stocks are being hit hardest. For example, bank stock down 4 to 6%, oil and gas sector down almost 6 to 8%. As on Singapore time 12:30 am, Dow Jones down 1,000 points, S&P 500 down 100 points, Nasdaq down 360 points. Even the crude oil down almost 12%. Not only the stock market, both cryptocurrency and bond yield are also tumbled. In short, everything is tumbled except the healthcare stocks like Pfizer, TMO, Moderna, which may be benefited from the higher demand on vaccine or healthcare products. By right, November is one of the most bullish periods of the year. However, Black Swan event is always unpredictable. Do not forget that now is winter period, where the flu virus or COVID could spread like crazy. We can only follow our plan to deal with the upcoming Black Swan event. Oh well, in addition to the COVID Black Swan, we can also anticipate interest hike or rate hike next year. In short term, rate hike news will hit the market because the earning will be affected and less cheap money to leverage in. Although we do not know if the COVID is hitting again, will the Fed continue or reverse their tapering process? Nonetheless, let us assume the rate hike is still coming. Well, can we still invest in this market? Yes, absolutely. However, it is more crucial to choose the right stocks between the right sector to profit. I'm going to share my opinions on which stocks to invest in, and I will do it for sure. Before we start, it is not easy to prepare a video. I hope you could encourage me by giving me a like on this video. If you feel that this video is helpful, please share this video to others too. To make it easier to view, I divide the companies into 4 quadrants as below. High impact by COVID, bearish. Less impact or benefit from COVID, bullish. Negative impact by rate hike, bearish. Less or positive impact from the rate hike, bullish. First, let's look at the COVID. If the new strain of COVID is a serious one and the current vaccine is ineffective, the following stocks in these sectors will be hit hard. First, all value stocks, as the market already priced in a healthy recovery of economy and earning of these value stocks. Second, the biggest hit will be oil and bank. For the oil stock, demand will be reduced again. For the bank, their bad debt or debt default will increase again. Feds may also delay the rate hike, which also impact banks' earning. Travel stocks like airline stocks, DAL, LUV, or stocks rely on overseas travel spending like XP, Carnival, CCL, etc. Next, let us look on the sector that will have lesser impact or even benefit from COVID. First, healthcare stocks like vaccine products, Moderna, Pfizer, TMO is also benefited because of its strong mood in the clinical and healthcare consumables. Interestingly, United Health Group (UNH) also indirectly benefited from the pandemic or lockdown because more people are locked in their house and do not look for their doctors often. Consequently, less people proceed for the claims. UNH earnings doubled during the pandemic period. Technology stocks, as generally they are borderless and people will even rely more on them if lockdown happens. Examples: Apple, Microsoft, Unity, Facebook. Third, COVID concept stocks. These are the stocks will have higher demand because of COVID outbreak. Zoom, Peloton, a company that supplies exercise equipment. Teladoc Health, which provides telemedicine and virtual healthcare services. Glove stocks. However, most of these companies have very high PE or PS ratio. 4. Defensive or grocery stocks like Costco, Walmart. 5. However, this time, I do not add e-commerce concept stocks like Amazon because of the supply chain issue. The same reason applies to the semiconductor stocks. Next, let us look on the rate hike impact. The most direct impact on the rate hike is there is less cheap money available. Thus, earnings of the company will be affected. Therefore, at the rate hike environment, a speculative company will be hurt the most, as the macro environment won't be able to support their high valuation. However, this does not applicable to profitable company with a strong economy mode that can simply raise their product or service price to boost their earning. In fact, if you look on the history from year 2016 to year 2019, the rate hike was happening. If we compare the three main index ETF, XPY, QQQ, and DIA, the market indeed were bullish. The sharp drop in the October was because of US-China trade war that is considered as a political black swan, which was not predictable. Thus, in a rate hike environment, you should continue to invest in stocks. Here are my criteria to select stocks which could benefit from the rate hike environment. First, must be profitable, showing consistent increase of revenue and net profit. Second, strong economy mode. Third, the current price is near or below its intrinsic value. Thus, the rate hike will not put too much pressure on its PE. Let us use the same examples for the stocks we classified just now for the COVID period selections. Among the above examples, let us further classify them if these stocks or sector that could be benefited in rate hike environment. First, among all healthcare stocks, only UNH and TMO are in my preferred list. Both of them show consistent revenue and profit growth, and their intrinsic value are generally reasonable. Moreover, do you still need healthcare insurance even the rate increases? We need. Do research lab or hospital still require medical consumables? Yes, they need. Thus, both UNH and TMO have strong economy mode too. By contrast, Pfizer and Moderna at this moment are more for vaccine or COVID pill speculative play. Their revenue and profit growth are also not consistent. My choice will be UNH and TMO. For the technology stocks, there are no doubts that Apple, Google, Meta, Microsoft have very strong mood. They are also showing consistent revenue and profit growth. However, for the speculative technology stocks, rate hike environment will hurt them. For example, Snap, Unity. For the COVID concept stocks, most of their PE or PS are extremely high, such as Zoom's PE value is at 66.49, while Microsoft, which also has Microsoft Teams for online meeting, the PE value is only 36.85. Other companies like Teladoc Health, Peloton, most of their net earnings are negative. In general, I will avoid all the COVID concept stocks. Yes, if the COVID situation is worsened, which I hope it won't happen, this stock could bring nice profit, but speculation is not my way for long-term investing. Value stocks. Most of the value stocks are cyclical, thus the effects of the interest hike on them are more difficult to evaluate. In general, value stocks tend to perform well because interest hike also signifies a better economic outlook, and value stocks are more connected to the economy. Notably, interest rate and bank profitability are connected, with banks benefiting from higher interest rates. When interest rates are higher, banks make more money. From here, which sectors or stock to choose is pretty clear. My priority will be profitable technology stocks like Microsoft, Apple, healthcare stocks like UNH and TMO, defensive stocks with strong mood such as Costco. I'm going to give one more tips later on how to identify a stock that have a chance to survive. Before that, I would like to introduce my Telegram channel and Facebook page to invite you to mingle with us. What if your stocks are not in my list? Here, I provide a quick way to check if your stocks is suitable to invest during the COVID environment or interest rate hike environment. Please note that you still need to do your own research on the company, earning trend, and other fundamentals parameters. Use Microsoft as an example. I'm here using 2 years weekly chart. First, to check if the stock could perform during COVID. Check how the stock behaved from 33rd March 2020 to 08 February 2021. A stock that can survive during COVID lockdown period should recover from the low and hit new high. If we look on the technology ETF VGT, most tech stocks are showing this behavior. By contrast, if you look on bank stock like BSE, it did not recover fully on 8th of February 2021. How about the interest rate hike? We can look for the chart from 08 February 2021 to August. This is the period that many news about tapering and interest rate hike are released. For example, bank stock like BSE, it goes to new high. Similarly, for Microsoft, it also managed to hit new high. If we look on the speculative stock like Unity, it has a good run until February 2021, but then it could not recover in August. The recent surge was because of metaverse concept, which we shall talk about it next time. Peloton, a speculative COVID concept stock. It had a nice run from March 2020 to February 2021, but after that, its stock keep going down until today. Last example here will be airline stock for recovery play. It clearly not a good bet. It was not even able to recover to its pre-COVID price. Just note that no matter what reason for a stock to tank or undergo correction, it is normal. Stock does not increase through a straight line. Do our research, stay with the plan, and invest accordingly. This is how we could profit. This is all I would like to share today. Thank you and see you in the next video.